AMD has been one of the best performing stocks in the market for the past 10 years. From less than $2 back in July of 2015 to $117 today, the stock is up nearly 7,000% in that time period. The gain was as high as 12,000% at the peak in March 2024. But recently, the stock has been facing more challenges and competition, and since that peak in March 2024, the stock is down nearly 45%. So, is AMD a buy today, or will it continue to be known as the advanced money destroyer? That's what we'll discuss in today's video, and I hope I can share enough information so you can make that decision for yourself. First, I'll explain what a semiconductor is, if you don't already know. Then we'll dive into AMD's role in the semiconductor industry. Then we'll explore its business model and financial health, assess its strengths and weaknesses, and evaluate its current valuation, and finally identify potential growth catalysts. Just remember, this is not financial advice, and like the video if you find value in it. Okay, first up, what is a semiconductor? If you've listened to CNBC or other business news channels, you've likely heard about the semiconductor industry, semiconductor companies, and semiconductors. Typically, the word is used when investors describe the products that companies in this space make. The word semiconductor is almost used interchangeably with chips or GPUs in recent times by most investors, myself included. However, semiconductors are physical materials, like silicon, like you've probably heard talked about in the finance world. A semiconductor like silicon can conduct electricity under certain conditions, and they are the foundation of the chips. Silicon is by far the most commonly used semiconductor in anything from processors and memory chips to solar panels. So that's the technical meaning of the word. But as far as the finance world is concerned, a semiconductor is the processor or chip or whatever product a company makes. But in reality, the chips and processors are products made using semiconductors. Moving on, the production of semiconductors involves multiple steps, but in the case of AMD, the first one is the only important one, the design. That's because AMD doesn't actually make their own semiconductors. They just design their semiconductors, which are then produced in semiconductor foundries. Most of their chips are actually made by TSMC, which is a semiconductor manufacturing company. If you want to learn more about a different step in the semiconductor process, the lithography part, check out my video on ASML, which is another one of my holdings, and they are the leader in lithography, which is a huge part of semiconductor innovation. Semiconductors are used in a variety of things like smartphones, computers, TVs, smartwatches, and other wearable devices, smart home devices, and solar panels, cars, both in your current cars and in terms of the display that you currently have in future autonomous vehicles, and they're found in just about every other modern electronic device you can think of. Okay, that's enough about semiconductors. Let's move on to AMD and how they fit into the semiconductor industry. I want to talk about AMD's business model, their key products, their competitive position, and the different applications of their AI and data center solutions, which is probably the product you're most interested in and what could make AMD the most amount of money in the coming quarters and years. AMD's place in the semiconductor industry is designing high-performance computing and graphics solutions. The keyword there is designing. As we talked about already, AMD outsources the manufacturing of their chips to third parties, which allows them to concentrate on the design and innovation. Their key products are first their processors, which is the Ryzen series for consumers, and the EPYC series for servers and cloud infrastructure. Second, their graphics cards, which are the Radeon series for gaming and general consumer use. And third, their AI and data center solutions, which are their Instinct series accelerators for high performance computing. And an accelerator is just a chip designed to speed up specific computational tasks. That's an important distinction because different accelerator providers might provide accelerators that fit different solutions based on what task they're designed to perform most efficiently. In the case of the AMD versus Nvidia debate, that's important because these chips are often grouped together and talked about in the way that makes them seem like they're all the exact same and that Nvidia simply makes the best chips. But that's a bit misleading because different chip providers may offer solutions that are better for different tasks and therefore cater to different buyers. Accelerator tasks often involve parallel processing, which is where the GPUs really shine. And if you've heard anything about Nvidia or AMD recently, you know that GPUs are the products that people talk the most about. Another important thing to understand is the difference between training GPUs and inference GPUs. If we start with training GPUs, they're used in the initial phase where the AI model learns from very large data sets. Their goal is to optimize the model's parameters through computationally intensive processes. Inference GPUs, on the other hand, are used after the model has been trained. These GPUs handle real world tasks where the model trained makes predictions based on new and, in some cases, live data. If you're thinking about this AI game in the long term, inference GPUs are the products that will likely see demand for longer. The key differences between these two products comes down to how they're designed, specifically computational power, efficiency, memory, and precision. For example, an inference GPU might trade off precision for speed. To bring this whole point back to AMD, an analyst asked Lisa Su, AMD's CEO, a question during the last earnings call that said, I wonder if you could talk about the $5 billion of AI revenue, how that breaks down between training and inference. Can you just talk about what that split looks like going forward as well? So Lisa Su's answer was, from the $5 billion that we're talking about, the early traction has been primarily with inference, just given the strength of the product portfolio. MI300 is very, very well optimized for inference, given the memory capacity and memory bandwidth capabilities. But we have had training adoption, and we expect that will continue to grow as we go through the next few quarters. And so, as we fast forward a year, I would say we would have a fairly balanced portfolio between training and inference. Currently, Nvidia dominates training, so if AMD is able to gain some traction there, that would be really good. Moving on to the numbers, let's look at AMD's financial metrics and valuation. I wanted to start with the valuation in this video because I think it can give us perspective when looking at the revenue and earnings and all those metrics. Starting with the forward PE. AMD currently has a forward PE of 25, which is roughly in line with the overall market. As I mentioned at the start of the video, AMD stock price is down nearly 45% since their all-time highs in March 2024. And you can see the forward PE at that time was much higher, over 50 in March, and it has slowly been coming down since then. And that's why growth stocks can be so scary, especially when you're just starting out in the market. What happened was throughout 2023, the revenue didn't just stagnate, which is already bad for a growth stock. It actually declined slightly year over year, which was discovered when the company reported earnings in March 2024. This caused growth investors to flock out of the stock and sell it down to the prices that now, in my opinion, are almost ridiculous. And we'll see if you agree with that when I show you the company's predicted growth later. To give more context around the revenue increase from 2019 to 2022, there are a couple of reasons for that. Number one, COVID hit, so people bought more computers and gaming consoles while they were stuck at home. These devices had AMD's processors or CPUs and graphics cards or GPUs. Then, after people were let out of their homes again, stimulus checks hit, and people wanted the newest PlayStation and the newest laptop, and there was this crazy boom in demand for pretty much everything because people had extra money to spend, and they had been locked inside for months, which eventually caused inflation until the Federal Reserve stepped in and raised interest rates to slow spending, and eventually the stimulus money and savings ran out, and so did the demand. That's why we see this stagnation in revenue over the past couple of years. Another reason for that is the data center growth and AMD taking market share from Intel as companies and largely cloud service providers started adopting AMD's EPYC CPUs because they simply had better performance, efficiency, and were more cost effective. AMD's products were simply better and offered better performance per dollar compared to Intel's products during this period. Then came 2022. As I mentioned, stimulus money ran out, the Federal Reserve raised interest rates, and the consumer started hurting. Therefore, the sector saw a slowdown in demand, which kind of led to this stagnation in revenue from 2022 to 2023. Not only did revenue slow, but their profitability decreased too. Now, at the same time, they started spending heavily on research and development and infrastructure to build out and scale out their data center product. And that's what you can see with their earnings per share, their free cash flow, and their profit margins. with products going on sale due to lower demand and in an effort to clear built up inventory that hit profit margins. And then on top of that, the spending, that's why AMD's profitability dropped to nearly zero for a few quarters. But that's the past. We're investing in this company for the future, so what does that look like? First of all, from the AMD team themselves, they expect revenue of approximately $7.5 billion, so roughly a 22% year over year increase, which is driven mainly by growth in their data center and client segments, they say. AMD doesn't like to provide EPS projections, but they do provide gross margin projections. So they expect gross margins to increase from 50.1% to 54%. And then analyst numbers. Those are roughly in line in terms of revenue, but they expect EPS to be around $1.09, which is a 166% increase year over year. But you got to keep in mind, AMD was sort of late to the whole data center AI game compared to Nvidia, so they're still in the early stages of gaining traction in their data center business. As they reported in Q3 2024, the last quarter, the data center segment was up 122% year over year. That's why this is such an attractive opportunity. I get that AMD has kind of been a mess over the last year or so, but in my personal opinion, now is the wrong time to be getting out of this stock. They now have the data center segment fully built out, and analysts are expecting revenues to grow 20% plus over the next few years. And the stock just got pushed down to such attractive valuations over the last half year or so. And I really don't see it going much further down, assuming the company can meet their new expectations. If it does go further down and the long term story remains intact, I'll continue to buy. Moving on to the strengths and weaknesses of AMD, starting with the strengths. On the processor side, the Ryzen and EPYC processors have been very well received for their performance and efficiency. AMD recently announced a partnership with Dell, who will be offering AMD Ryzen powered PCs for the first time. Acer, Asus, HP, and Lenovo also offer AMD powered PCs. So that just shows how good their processors are. On top of that, at the CES conference at the start of the year, which is in Vegas, AMD showed off their new AMD Ryzen AI Max processor. So they're continuing to innovate and bring even more performance to consumers with AI. If you've been reading anything about the earnings so far this earnings season, you know that we saw the banks report good numbers, which means that the consumer is currently doing okay. Banks are typically the first companies to report earnings every earnings season, and it's super important to pay attention to those because they can tell you so much about the economy and the different parts of the economy. A few weeks after that, we get a lot of big tech companies reporting earnings, and that was actually this week. We got Microsoft, Meta, and Tesla earnings after market close on Wednesday. They confirmed continued AI spending as we expected, and that's despite the whole DeepSeek case from last weekend. If you missed out on that or want to hear more about the news or rumors that were floating around, check out my last video. However, this AI spend could turn into weakness because no one knows what AI profitability or return on investment is going to look like for these companies. If they don't see that return, they could slow down AI spending significantly. But to share how I view it, I think there are so many different applications for AI, and I believe it has the opportunity to allow companies to do more with less, both by empowering current employees by boosting productivity and such, and replacing employees with cheaper labor. And as we talked about in the last video, large language models, which is what AI's big application is currently, is just the start. Another weakness that is often mentioned is Nvidia's dominance. Now, I don't see this as a winner takes all market. Any market is rarely a winner takes all market. And I believe AMD can compete, especially on the inferencing side, either through providing competitive products or by simply offering more attractive pricing. Regardless, we also know that NVIDIA's AI chip production for all of 2025 is already sold out, so there's literally too much demand for them to meet. Lastly, the biggest AMD weakness, in my opinion, is the software side. That's where AMD really lags behind NVIDIA. NVIDIA's CUDA simply leads because of its compatibility, its optimizations, and its widespread industry adoption. It's just currently the industry go-to. CUDA has been around for longer, it can offer better performance, especially for machine learning tasks, It's more established with more libraries and tools and community support. Essentially, it's easier for developers to get started and stay with Nvidia when it comes to the software. So with all that said, what am I personally doing? If you've watched any of my previous videos, you may know that AMD is my biggest position. It's currently 20% of my portfolio. I've been buying this one heavily for the past couple of months, really since the end of November. Currently down around 9% on the position, but I continue to buy. As you may know, I'm okay with taking big bets as long as my conviction in the stock is high. And with AMD, it's really high. I could even grow this position into a 25 or 30% position in my portfolio if the stock continues to tumble after earnings. When earnings come around on February 4th, I personally believe that investors will see that the turnaround is happening and that the data center adoption is continuing. So I don't think I have too much more time to continue to build out this position. I think we're at the start of AMD's next growth cycle, and I think it's going to be a great one. As always, do your own research. I could be completely wrong on this, but this is what I'm seeing and what I'm personally expecting of the company. We'll have to wait and see what happens, obviously. So, see you in the next one.